Hey everyone, my name is Logan. I'm a realtor here in Southeast Michigan. And whether you've been thinking about buying, renting, you've probably asked yourself at one point, what's the better option for me? Well, today we're going to be breaking it all down. I'm going to be walking you through the pros and cons of renting and buying, as well as the financial impact and some key factors that will help you decide what's right for you. By the end of this video, you should have a clear understanding of which option is best for your situation. So if you're still on the fence, stick around and let's get into it. First, we'll start off by comparing the monthly payment of rent versus a mortgage. As of March of 2025, the average rent in Michigan is currently at $1,109 a month, according to apartments.com. And as of January of 2025, the average mortgage payment is sitting right at $1,881 a month, according to Rocket Mortgage. One thing to keep in mind is that rent can increase at your landlord's discretion, while mortgage payments stay the same during the entirety of the duration of the mortgage. And according to Zillow.com, rent actually increases on average once per year, and that's going to be usually at lease renewal. So the average lease in Michigan is a 1-year lease. So when you renew your lease, the landlord can actually increase your rent, and on average, it increases by 3 to 5%. Another thing to keep in mind is that rent doesn't have an endpoint. So once you stop paying rent, you have obviously the possibility of getting evicted. On the other hand, when it comes to mortgages, there's an exact end date, and once that end date is reached, you achieve 100% equity, which means you fully own the house and you no longer have to make payments on it. Next, we'll go into the tax breaks and the equity appreciation. So first, we'll start off with the mortgage interest deduction, and what that simply is when you're making your monthly mortgage payment, some of that payment is going to go towards interest to the bank, and that interest that you pay towards the bank is tax deductible on your federal income tax return, and that's going to be up to a certain limit. So the Tax Cuts and Jobs Act of 2017 actually capped the interest deduction at $750,000, which before that was previously at $1 million. And this limit is actually only for married couples that are filing jointly. There's different limits for other filing statuses, and you also must itemize your deductions. You can't take the standard deduction and take the mortgage interest deduction. Next up, we have our property tax deduction, which is going to be available to our homeowners to deduct the taxes that they pay to their state and local governments. And this is only going to be available on your primary residence. So for instance, say you have an investment property as well, this is not going to qualify for the property tax deduction. And then, of course, we have the potential for a capital gains exclusion. So if I'm going to sell my house and I'm single, I can exclude up to $250,000 off of the profit of that sale. And if I'm married, I can exclude up to $500,000. And you have to meet the certain requirements for this exclusion. And basically, you just have to be living in the property for 2 of the past 5 years. It doesn't have to be consecutive. You can live in the property for 1 year, move out for 2, move back for another year, and still qualify for this exclusion. And the limitation to this exclusion is that you can only use it once every 2 years. It also has to be your primary residence, and anything above the 250,000 if you're single, 500,000 if you're married, anything above that is going to be taxed. And our last two deductions is going to be the points deduction and the home office deduction. So the points deduction is going to be if you're buying down your interest rate in the form of points. Those are going to be tax deductible. And then we have the home office deduction, which is just if you have a home office in your home that is exclusively used for business purposes, that can be tax deductible in terms of the expenses, heating, cooling, electricity. Now there is very specific guidelines for this, and the IRS can be strict about this. As always, I like to say that I am a real estate agent. I am not a tax professional. So for very specific things, I would meet with a tax professional. Next thing we'll talk about is equity appreciation. So before we can actually start talking about equity appreciation, we have to break down what equity is. Equity is the difference between the total market value of your home and what you currently owe on it. So that difference, the equity, is the percentage in which you own the property. One way to build equity is through your monthly mortgage payment. I kind of like to say it's a forced savings because you're required to pay it monthly, and it slowly transitions your cash into equity. And as your equity in the home builds, your net worth will also build. And once you reach 100% equity, you'll have full ownership of the home and you'll no longer have a monthly mortgage payment. And the other way to build equity is through a market appreciation. Now, real estate tends to increase in value over time, and there are some short-term fluctuations. but in the long term, real estate has proven to increase over time. And that increase over time increases your equity in the home, which increases your net worth. Another thing to keep in mind before we move on to the renting side of things is that homeownership doesn't just include the mortgage in terms of cost. You also have maintenance, repairs, property taxes, insurance. So keep that in mind when it comes to all of these great things about homeownership in terms of tax benefits and equity appreciation when we go into talking about renting. Now we'll go into situations where renting might make sense for you. And we'll start off with if you have a job that requires you to relocate, pretty oftenly, say every 1 to 3 years. Renting might make sense for you because it allows you to have that kind of flexibility. Whereas if you were to own a home, you would have to go through selling the property and all of the complexities with that. Another thing would just be if you want that lifelong flexibility. Maybe you want to explore cities, neighborhoods, different areas, and renting will give you that opportunity, whereas a mortgage is a long-term commitment. Or maybe you have some financial or credit constraints that is keeping you from homeownership. Maybe you don't have enough for a down payment. They say a healthy down payment is around 20% to kick off that private mortgage insurance. And maybe if that's too much for you, maybe renting is the better option to have that kind of stability while you save. You might consider renting if you have some high interest debts, such as credit card loans or personal loans, where it would financially make more sense to rent and pay down those debts, and then in the future, save for the home. Another reason why you might consider renting is if you have just the general lack of desire or the budget to upkeep a house or to properly maintain a house. You have to keep in mind that homeowners are responsible for every little type of maintenance, from lawn care to if a sink breaks. So if you're that type of person who likes the minimal responsibilities and you prefer to have that responsibility pushed off to a landlord per se, renting might be the better option for you. For people who travel frequently and don't want the long-term commitment that comes with owning a home, renting can give you that simplicity and peace of mind so that you can pursue whatever lifestyle that you're interested in. Ultimately, the decision between renting and buying comes down to your long-term plans, your financial picture, and your lifestyle preferences. By weighing factors like equity growth, mobility needs, availability of funds for down payment and upkeep, you can determine which path aligns with your current personal goals. If you made it this far in the video, I would love for it if you could like and subscribe. If you have any questions, make sure to drop them in the comment section below and I'll respond as soon as possible. Hopefully by watching this video, you'll be able to decide whether or not renting or buying is the right option for you.